Today's update, there's two big things we need to be aware of. So for those of you watching me on YouTube, thanks as always for joining us. This is my game plan. Today what I'm thinking about is, what is the FOMC going to do? So the first thing I want to look at is, what is the FOMC expected to do? And that's really easy to look at with the target rate probabilities. The expectation for this March meeting, this March 19 meeting, tomorrow's 2 p.m. rate statement, and then 2:30 p.m. Eastern press conference, 99% no change in the rates. That means that everything here is going to be about the press conference and the words that the Federal Reserve carefully curates to communicate what it is that they're thinking about doing. Well, the next meeting will be May 7. It's 80% priced in that this will be a big cup of nothing. Again, rates are currently at 425 to 450, and they are expected to stay just there for the May 7 meeting. All right, so what's in play? Well, June. June is the first month where there is some expectation of a quarter-point rate cut. This will be the month to look at in the wake of the rate statement and in the wake of the press conference. Does this column get taller, which is the quarter-point cut, or does the hold column get taller, right? And so we want to see which one of these around, 3 whatever o'clock tomorrow Eastern, when press conference is completed and Jerome's done speaking, which one of these for June is leading the charge. And then also, does that spill into July? That's the game. All right, the other thing to pay attention to is end of quarter. And that brings me to the title of this video, right? Where is your attention? And one of the things that we've been doing in the Sector Secrets Mastery, and in fact, today's premium video was called Split Attention. And one of the things that we're doing is saying, look, we're traders. And the easiest way to manage multiple styles of trading is to accept that each time frame has a job. For a lot of traders, they're still using multiple time frame confirmation, and that's why this is a tough gear for them to shift into. So this is what I would recommend, and this is what I'm doing in terms of our goals in the Sector Secrets Mastery. Goal number 1 is obviously grow the account. But what kind of account? Well, I've got a swing trading account. I've also got a position trading account. All right, my swing trading account is all about, for the most part, daily time frames, and sometimes even a 1-hour time frame. My swing trading is anywhere on the lower end of the hold time of 1 to 3 days to 2 to 10 days to expiration. My position trading account is 6 months, 2 years, and I do that on a weekly time frame. So if I know that each time frame has a certain hold time expectation, and I can separate the two styles, swing versus position, all of a sudden I can look at these two time frames and I know how to compartmentalize. And this has not been more important than the current pullback, because if I'm swing trading, for the most part, most setups are going to be red candle in the gold zone. These are going to be long puts with that 2 to 10 day time horizon in the weakest of the sectors, which for the most part right now are consumer discretionary, airlines, financials, regional banks, and a whole host of others. In fact, there's only 3 sectors that are positive right now. Gold miners, because gold is absolutely on a tear, agribusiness, and energy. So GDX, MOO, and XLE. Everything else is below 0 on return for the month of March, halfway through the month. But I want to find the absolute weakest examples of stocks and sectors. I take a look at UAL. I took a look at AAL. Just look at the JETS sector. Very, very weak. You take a look at regional banks. Very, very weak. You take a look at financials. Very, very weak, right? But now, this is the split attention part of it. This is now knowing how to divide your attention, right? If I take a look at the weekly time frame, and we've been talking about this in a lot of videos. I've talked about how to look at a weekly time frame with a 6-month to multiple year expectation. And I do want to focus on buy the dip. I know that gets mocked, but it does work. The last buy the dip was August of last year, and the next buy the dip might be later on this month. And that brings me to the end of month. And this, again, I want to present questions that you can ask yourself, because these are the same questions I'm asking myself. In 12 to 18 months, am I going to regret not buying names that are either mean reversions like XLF or opportunities to buy into 10 and 20% pullbacks, like you can see here with the move below 480? It's a 10% pullback on the QQQ, just over. We hit the 10% pullback level on the SPY. Am I going to regret not at least allocating a certain amount of my budget for position trades to these 10% pullbacks? Right? It doesn't matter if it's financials. It doesn't matter if it's technology. Maybe there's an individual stock you're looking at. Gosh, Rag, I haven't seen Amazon down in this level for a while. This is actually a beyond 20% pullback, right? What about traders looking at Microsoft? Right? Say, Rag, I'd really like to put some Microsoft in my account. Again, where we sit at the moment is nearly a 20% pullback. We fell shy of that by about $3 or $4 with last week's low. So these are significant moves. Now, another thing that I've been encouraging my traders to look at would be dividend yielding names within the NOBL. Are there places to be bullish on the swing trading side? Yes. Gold miners, maybe some energy. It might be a little too soon because crude's quite weak, and agribusiness. Right? Not a lot. I'd stick with gold and gold miners. But on the weakness side of things, as a swing trader, barring whatever Jerome is going to say tomorrow, for the most part, long puts with a 2 to 10 day time horizon makes the most sense. But when I start looking at the weekly, and maybe someone's out there looking at the Magnificent Seven, saying, wait a minute, has Nvidia pulled back in such a way that it makes sense to look at? Yeah, this has been beyond a 20% pullback. What about Apple? When Apple touched down here, just shy of 208, that right there was a 20% pullback on Apple. So while traders seem very keen on buying up at highs, interestingly enough, when prices get down to blue light specials, all of a sudden, everyone loses their will to buy. Has the narrative changed? Is there something new about iPhones and Macs that we don't know? Or has this just been an outgoing tide and an opportunity to build a longer term position? And that's where I think a lot of traders are going to struggle. And I even mentioned the same thing on Bitcoin. When my friends and family are calling me when Bitcoin is over $100,000 and my phone's not ringing at 80, I feel like I failed them, because nobody in my life should be buying Bitcoin up at this area. No way, not unless you hate your money. This, as you can see here, that is an opportunity if you believe in the narrative and the overall strength of Bitcoin. Same idea. Let's go shopping. Yes, we're going to have to divvy up our attention, but where is your attention at? Make sure you're keeping an eye on those swing trades, but don't neglect a very interesting opportunity right now on the weekly time frames. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.